the MAX is back in the air, but is it going to matter to Boeing? The orders have already been put in. What's their backlog looking like?
Sure. Thanks for having me. I'm jealous that Phil gets to go on that flight and all those app geeks, as he called them. The reason this flight is so important for Boeing is that American Airlines is the first airline bringing it back into revenue service. There's already about 10 MAXs flying globally. They're mostly in South America with Aeromexico and Go. But the reason this is so important is Boeing has 450 Boeing MAXs sitting on the tarmac right now. Those aircraft valued at maybe $30 million apiece are taking a bunch of inventory on the balance sheet. So we have that inventory unwinding over 2021, 22, and 23. And as that inventory unwinds, it releases about $8 to $9 billion of free cash flow per year. That'll be hugely beneficial for Boeing as it's been in a cash crunch in 2020. So that's why it's so significant that the aircraft is starting revenue service, and as it does, airlines could take the aircraft.
Yeah, and you expect them to lose money on an EPS on a GAAP basis next year as well? Are they going to be free cash flow positive, or at least positive earnings when in fiscal 22, Sheila?
So yes, they're free cash flow negative next year. The reason for that is a lot of airlines have already prepaid for these planes. So as they receive delivery, and we're forecasting about 180 of them are delivered next year, they won't have to pay as much for them. So the cash flow starts flowing in 22 and 23. And the cash numbers are actually quite big. They're around 10 to 12 billion per year in 22 and 23. But we have to remove some of that inventory to normalize it. So we get around 8.5 billion in free cash flow in 2023. And on a 6% yield, we get a 245 stock. We look out to 2024, that's a more normalized year, and we get a $300 stock as they generate closer to 10.5 billion in cash.
Well, let's talk about something a little more fun, which is actually flying itself, because for the third day in a row, and I think the seventh out of the last 10 days, Sheila, more than 1 million people got on a plane. In fact, yesterday was 1,111,000. We continue to creep back up. We're still about 50 to 60% less than this time last year. But the airports seem fairly full. The airplanes seem fairly full. I booked some flights this morning, actually. They seem fairly full based on sort of the seat map. But is it going to be a story of domestic over international travel, leisure over business travel? And that's why you've got, I think, maybe your only buy rating is on Southwest.
Exactly. And that's a really great point you bring up. Because as we're looking at air traffic, it's down about 63% year over year. But the real story is domestic is down 25 and international is down over 75. The domestic story really hinges around China and US. China's down only 3% year over year, which is quite significant given COVID started there. And then the US is down 36%. So doing better. But those TSA numbers hitting 1 million in December for several days, despite the COVID headlines, despite the death rates at all-time highs, are really the key story here, in addition to the MAX. So that's one thing we're looking at, and that's why the reason we have a buy on Love is because they are the most domestic airline of the airlines we cover. We have a sell on American for other reasons, mainly around liquidity and valuation, but Love's domestic focus, and we think they're going to be able to take share because they're going to go into markets that United and Delta really held tightly, like Denver, like Chicago, and they could take market share. So that's really our thesis on Love.
Shepard Smith here. Thanks for watching CNBC on YouTube.